Good morning. You're watching All You Need to Know on BloombergQuint Live, and I'm Alex Matthew. First, the headlines this morning. The death toll in the coronavirus outbreak rises to 361, with more deaths being reported in the Hubei province. The PBOC springs into action to prevent a potential sell-off in the Chinese markets, which opened today. The Employees Union of the Life Insurance Corporation of India has opposed the government's proposal to sell stake through an IPO, calling it a move against the public interest. Former Economic Affairs Secretary Subhash Garg has said that the real fiscal deficit may be close to 5% of GDP. He says this in an interview to BloombergQuint. The Finance Ministry clarifies on the move to tax non-resident Indians, saying that only income generated in India will be taxed. And Hero MotoCorp reports a 14% drop in its sales in January, while iShares monthly sales fall 15% despite exports nearly doubling. Now, the US markets tumbled on Friday, with the Dow Jones and the S&P 500 recording their biggest one-day fall since August. Both the indices have now given up their gains for the year. The only outlier, though, was Amazon, and that continued to soar after strong quarterly earnings. Abigail Doolittle of Bloomberg News wraps up the trading action on Wall Street in this report.
Stocks tumbled in Friday's Wall Street session on coronavirus fears. At the end of the day, the Dow finished down more than 2%, its worst day since August of 2019. The S&P 500 and the NASDAQ down a little bit less. The S&P 500 down 1.8%, that NASDAQ down 1.6%. Each of those indexes have a weighting to Amazon, which on the open put in an all-time high. Those shares surging on a very strong holiday quarter. But the coronavirus fears really taking down stocks overall. In fact, for the S&P 500, it was the worst week going back to August. Bonds, Haven bonds, investors seeking the safety of Haven bonds as a hedge against stocks. Bonds had the best week since August. Faring even worse than the major averages were the SOX, the Philadelphia Semiconductor Index, or CHIPS, down 3.5%. The Dow Transport's down 2.5%. On the week, the Dow Transport's having the worst week since December of 2018. So it was risk off, risk off, risk off as investors face the uncertainty of what the coronavirus could mean for the global economy. Will it eat into the U.S. corporate profit outlook? With the way stocks were falling in Friday's Wall Street session, it seems as though investors are moving from headline fear and risk to the possibility that it could really eat into the numbers. Now, commodities once again were lower. Copper down for a 12th or 13th record day in a row, depending on whether or not you include the Martin Luther King holiday. Over that time period, in a correction prior to that drop, the copper and S&P 500 had been trading together, both risk assets. Copper, a big tell on the China economy. It could suggest more weakness is ahead for oil. As I had mentioned, though, Amazon was one bright spot, up 7.5%, an all-time high, again helping the S&P 500, the NASDAQ, from having bigger declines. On the Haven side, I mentioned that bonds were higher. That's true, too, for the Haven Japanese yen and gold, and the VIX spiking higher, hitting a 19 handle. So uncertainty and fear certainly reflected by that VIX. All of this ahead of China markets. That Shanghai Composite scheduled to reopen on February 3rd, perhaps a tell on bearish action ahead and more volatility, all on this coronavirus fear and the uncertainty it creates around the global economic picture. From New York, Abigail Doolittle, Bloomberg News.
In fact, the Chinese markets have opened up, and they have seen an ugly reopen. The two benchmarks, of course, losing between 7% and 8% after a 6-day break for the Lunar New Year holiday. China has, of course, announced several measures in which to support its markets and the economy at a time which has seen a number of coronavirus cases jump significantly. Rosalind Chin is joining us live from Hong Kong. She's been tracking the situation. Rosalind, good morning. What are the measures that China has unveiled?
China really trying to keep its supporting its economy and, of course, its markets, as well. As you saw, the markets opened lower in China this morning. Shanghai Composite down something like 8.7% after coming back after the Lunar New Year holiday. So what did China announce? Well, it did announce $21 billion worth of basically cash and money supplied liquidity to the market starting today because of fears about what might happen to the markets after they reopen reopen after that long break, and of course with the coronavirus causing a lot more fear in markets around the world as well. China playing catch up there. It also announced that banks should lend more and not call in loans to companies in places like Hubei, which is where Wuhan is located. That is considered to be where the coronavirus outbreak started, and also in other affected regions as well. Now, they also said that night trading sessions for futures have been suspended. Now, mostly these are targeted at short-term shoring up the market and the economy here, rather than long-term stimulus, which of course had been something that had been talked about, mentioned, rumoured for a little while, given that China's economy had been slowing anyway, even before the coronavirus outbreak started. Now, we're also seeing the UN reference rate was set today at 6.9249 to the US dollar. And in fact, a short while earlier, in fact, it did head to 6.9 to the US dollar earlier. We're seeing stocks around the region pairing, impacted by these moves from China. Now, of course, we've also seen oil slumping, and that is as demand in China is seen falling something like 20% of daily consumption due to, of course, less demand, less business overall going on in China.
But Roz, there's also updates on the coronavirus itself. There's concern in multiple geographies that the spread is quite significant. What is the latest that you're picking up?
That is right. The CSIS says that this coronavirus is very transmittable, so it's moving very quickly. However, of course, it is not as fatal, perhaps, as some other coronaviruses have been in the past, notably ones like SARS. Now, in China alone, we saw the number of cases jumping to over 17,000 now. The outbreak showing no signs really of slowing down there. 2,296 of those cases are considered to be severe. We've had the death toll, as you mentioned earlier, at 361, which is an increase of 57, and really the first death outside of China was seen in the Philippines. The first reported case there of a death outside China in a man that had travelled to China. Now, we also heard that the US saw its 9th confirmed infection of coronavirus. No other deaths, of course, outside of China other than the Philippines so far. The G7 nations say they are in talks to coordinate their responses to the coronavirus spread. The German health minister is saying that no countries can really tackle this on their own. They really need to work together. And that's one of the things that the World Health Organization, declaring it a global health emergency, has helped to precipitate sort of different nations coming together to try and halt the spread of the coronavirus. But right now, of course, we all remain on alert here in Asia. People wearing masks, people doing a lot more hand washing, and of course keeping themselves in somewhat away from other people and crowded areas because of fears of the spread of this coronavirus. Back to you.
All right, Roz, thanks so much for those updates. All right, meanwhile, let's turn to what's making headlines across the globe. Sue Keenan of Bloomberg News brings you the latest First Word headlines.
Chinese province of Hubei, which is at the center of the coronavirus outbreak, it has reported 56 more deaths and more than 2,000 additional cases of the virus in the past 24 hours. 361 people have now died in China, with more than 17,000 cases confirmed. The WHO, World Health Organization, has also reported the first death from the virus outside China, as a 44-year-old man from Hubei province died in the Philippines. Prime Minister Boris Johnson is expected to say later Monday that he will abandon talks on the future relationship with the EU if he does not get what he wants. Now, in his first speech since Friday's official Brexit, Johnson will spell out his aims for trade terms with the bloc. Meanwhile, EU negotiators are set to publish their own aims, and if no deal is reached, the UK and EU will be forced to do business on WTO terms with potential tariffs on goods. Finally, anti-corruption agents in Malaysia are saying that they are already, checking graft claims surrounding the AirAsia Group. This as detailed in the record $4 billion bribery settlement at Airbus. Now, documents filed in the case say Airbus paid $50 million to a sports team that was owned by two AirAsia executives as a reward for an order for more than 100 aircraft. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All Right. Now, the Indian government is giving income taxpayers time to transition to the new no exemption tax regime, according to Principal Economic Advisor Sanjeev Sanyal. He was speaking to Nikunj Ori of BloombergQuint, and he said that the government is also moving towards more transparency by listing out the extra budgetary resources. Listen in.
Tracks. So the existing track remains. We are just providing an option for a completely simplified system. Incidentally, we did this with the corporate tax rates system as well. When we reduced them, we introduced a new track, people who can go onto it. But at the same time, we have continued with the old system just so that we provide a degree of transition time. Why is this important? So in the corporate tax case, we had promised a certain tax regime based on which people had made investments. We can't simply uproot the whole thing and say, okay, now we have a simple system, it's good. So we provided people the opportunity to continue with that for a period of time. And while we are encouraging people to come out of the new system. The same thing is true for the personal income tax. People plan their lives, their consumption patterns, their saving patterns, etc., based on a certain system. You have to provide transition time. So we have provided transition time. Those who want to remain on the older system are free to remain on the older system. They don't have to know anything about the new system at all. So it's no further complication. And those who want to move on to a completely simple system with very few exemptions, there will be a few that will probably still be kept on. But by and large, an extremely simple system. And, they can go on to it, and that's that.
Will the exemptions like ATC continue? And since the finance minister also said that we'll be probably moving to a completely to a regime where there'll be no exemptions further, because exemptions tend to complicate the situation further. So are we going to move to a tax regime where there'll be no exemptions?
So I think a list is about to be given out, and may have already been done so, where what will be retained in the new regime will be notified.
Okay. You also spoke about several steps that the government has taken to deepen the bond markets, to deepen the corporate bonds market especially. And the speech also says that you're opening up government securities for foreign investors. Could you share some more light on it? How is going to benefit the bond market per se?
So we retain a certain amount of capital controls on foreign investment into government securities. Now, this is not an unreasonable thing to do because of the well-known impossible trinity problem, which is that if you completely get rid of capital controls, then you will have a situation where we'll either lose control of monetary policy or of the exchange rate. So that is why we have retained these controls. Now, but having these controls, a 6% limit, for example, means, however, that we can't be included in global bond indices, because global bond indices, for their own clientele, insist that you have to completely free things up. If you have to completely free these things up, then obviously we will have that impossible trinity problem. So one way of circumventing this debate is to take some securities, government securities, outside of these limits, place them outside of the system. These bonds will now be completely free. Domestic players can buy and sell them as they wish, but foreign investors can also buy and sell them as they wish. They'll be rupee denominated, and of course there's already a system of Euroclear and other things that are allowed, so they can be freely traded worldwide as people may wish. Now, immediately what this does is creates a class of bonds that can be included in global bond indices, which is what, if you will remember, when Prime Minister had gone to New York, he was in the Bloomberg conference, he had promised that we would want Indian bonds to be included in the Bloomberg and other bond indices.
All right, now the government has set an ambitious target for disinvestment at 2.1 lakh crore rupees in the next financial year. It also plans to sell partial stake in a life insurance corporation through an IPO. But is this target too ambitious? Unni Krishnan of Bloomberg News posed this question to the Disinvestment Secretary Tuhin Kanta Pandey. Listen in to that conversation.
I think LIC is a big institution. And of course, for listing, there will be a lot of due diligence requirements. We will be working out with the Department of Financial Services on legislative changes and other homework, and will come with a plan.
But is there a ballpark figure in mind in terms of like whether 5% is feasible? Because we are talking about a company as big, and you know, like some of my counterparts told me that Saudi Aramco was the hallmark of 2019. Maybe LIC listing could be a global issue of that proportion.
Well, as I said, that these are the early days to answer this question, and we'll come to it when the question comes, when the preparations mature.
But we are sure that we will be able to sell this stake within the next financial year?
Well, I think Department of Financial Services and DIPAM will actually work out, and we hope that we'll make substantial progress.
Okay. But there's no hard stop date, like you have to finish it by March 3.
This is, indicated for financial year.
Okay, indicated for financial. And then the big disinvestment number, target number, achievable given the fact that, you know, this year hasn't been as rosy?
I think we have a strong pipeline now. It wasn't there earlier, so I think we tried building up that pipeline around end November. And so we have, in the last 2 months, substantial progress has been made on those transactions. And we have, for example, Air India, we have come out with a EOI already. In the BPCL, we would be coming out soon. The others transactions we are also progressing. So we hope that the first half of next financial year, we would be closing several transactions. Besides that, we have many ongoing things as well. May not be as large, but cumulatively they will give us a kind of resources which we are looking for.
Pandey, coming back to the taxation exercise, there was a lot of expectations in the market, especially in the financial markets, about a phase out of the long-term capital gains tax. I mean, is that something that you examined and decided not to do, or that was never on the horizon?
No, I would like to remind everyone here, and particularly your audience, that it was a very conscious call of this government to introduce a long-term capital gain not long time ago, but in 2018 budget this came.
Yeah.
And what was the logic behind this? Because capital gain is also a form of income, and in any progressive society, every form of income should be taxed, whether it is a salary income or whether it is a business income, or whether it is your interest income that you earn from the banks, and capital gain is also another kind of income which should be taxed. So considering that this is an important element of income and that should be taxed, so therefore this long-term capital gain was brought in 2018.
Now, while the government has revised its fiscal deficit target to 3.8% for FY20, former Economic Affairs Secretary Subhash Garg believes that the number can be higher. He explains this in a conversation with Ira Duggal and also speaks about the government's plans to list LIC on the bourses. Listen in.
The coming clean in the sense that whatever is off budget is there. They have displayed all the numbers, whether this is the fully serviced bonds, or it is the food subsidy being met through the NSSF, or the bonds being issued for capitalizing banks or Exim Bank or the IFCL and all. So those all details are there in the budget papers. They have made even that much clear that next year the food subsidy would be partly paid from the NSSF. So even that number has been stated in the NSSF statement. So this is all there, but this is not formally part of the fiscal deficit. So what you see the fiscal deficit for the current year at 3.8% and 3.5% for next year, for getting the sense of the real fiscal deficit, one will have to do to add these numbers.
And I did precisely that, sir, with taking liberty of the formula that you had put out before the budget. So, if you look at what the numbers would look like, there would be the headline fiscal deficit number. Then you would add the extra budgetary resources to that. And then I have added the recapitalization bonds issued or the recapitalization amount for FY20. So if you put all three together, you get a fiscal deficit, real fiscal deficit of close to 4.97% of GDP. Am I close to the actual number, sir?
That's correct. So these three numbers are 75,000 crore for the food subsidy, 44,000 crore for FSB, and something close to 75,000 crore. So all these added together would be about 1% of GDP for the current year, and that added to 3.8 is 4.8 or 4.9. So you're very close to, and you got it accurately to my mind.
You've got a divestment number of 2.1 lakh crore with a plan to list LIC. What do you make of that, sir?
Right, so that is very interesting, overdue. LIC need to be listed. It's a big company with big possible market capitalization. You have seen HDFC and ICICI, SBI Life being listed at very good valuation. LIC is a big behemoth with 30 lakh crore of the investment portfolio and all. So it's a very good decision. It's the right time. It's done, and the government has estimated about 90,000 crore to come from this from the financial institutions, this investment, which I assume is by and large from the LIC. So my calculations suggest that if you do a 10% of the LIC disinvestment, you might get about 80 to 90,000 crore, which is what has been estimated. But the challenge would be that the LIC would probably need to be corporatized, and then disinvestment process need to be set in. It will be a new entity with a lot of policyholders and all, and therefore the government will need to do this very professionally and quickly to make it happen. Otherwise, we might have a situation like what happened this year, that the BPCL SCI in disinvestment, which should have been completed during the current year, couldn't be done, and it is postponed to the next year. So start early and get this done, and then it is achievable.
All right, well, let's turn to the trade setup for the day. Agam Vakil is joining me to tell you all about that, and also to tell you what's happening in the futures and options space. Agam, it was quite a tumultuous session on Saturday, to say the least. We saw 1,000 points being shaved off the Sensex. How are we looking at the start of this week?
Well, it's definitely going to be rocky, Alex. We really don't know how we can expect the indices to open, because we must remember that because of the fact that Saturday was open, the SGX Nifty for now is taking that into consideration, factoring that fall in, which is why the SGX Nifty is it does appear as though it's down around 2.4%. We don't have to see such a sharp fall in Indian markets. That said, we're still waiting for whether or not we could see some flattish movements or even more volatility to come through. But for now, there was a lot of weakness on Saturday with the Nifty 50 along with the mid-cap and the small-cap indices also declining by quite a bit. In fact, this was the largest intraday drop in a percentage basis since October of 2016. Nifty banking indices along with the PSU banking indices also falling in tandem with the benchmarks. It certainly was a very rocky day of trade. We saw FI sell stock worth around 1,200 crores, and this is on a day when foreign institutions are closed, and we still saw a lot of outflow coming in, and DIs really didn't do too much either. Of course, we must remember the mutual funds remained shut for operations on Saturday as far as the markets are concerned. In terms of contributors, it really doesn't make as much sense to just look at the top 4 or 5, because there was considerable weakness across the markets, and especially the last couple of hours of trade were quite brutal for a lot of investors and traders who were long in the markets. As you can see, about 178 points out of 136 in declines were, well, spread across all the Nifty companies. But let's talk about your futures and options space. And again, the picture may look very grim, but it does not necessarily mean that we are likely to see as much going forward. We did see about 28% increase in open interest, and this is, again, we must remember that's a new series. That was just the second trading day of the new series, which is why we're seeing a lot of accumulation, albeit with a drop of 2.5% on the indices. Coming down to your Nifty banking futures as well, which is down around 3.3%, 46% increase in open interest. Well, the same application for the Bank Nifty as the Nifty. We are into a new series. But when it comes to the open interest distribution at this point in time, we're going to have to wait for a couple more sessions before we start seeing stability and a development of a range. Because for now, as you can see, we're not looking at any amount of considerable accumulation on the lower end, except for the 12,000 put. And we all know that the Nifty currently is well below that mark. So, well, we're going to have to wait and watch. Of course, on the higher end, it is largely the 12,200 call. But for now, well, we're well far away from that level. So we're going to keep an eye on that one. And as one might expect, lots and lots of writing in calls. That would include calls from starting from 12,000 right down to around 11,700. And of course, we saw the Nifty end below that mark, the 11,700 mark. So that, of course, is going to be crucial. But let's move on and talk about the VIX. Surprisingly, it fell by as much as 3%, and it's below the mark of 17. But that's largely on account of the fact that, well, that event risk is behind us. And of course, that said, we don't really rule out an increase in the VIX from here on. Of course, the Nifty put call ratio also on expected lines fell to the level of around 0.85. Let's wait and watch where that goes. And of course, in terms of stocks, well, you will only largely see losers. We did have very sharp cuts in Coal India, ICICI Prudential, ONGC, LIC Housing, and I'm not certain if we had a lot of longs unwinding. But, well, like stocks like Escorts, NIT Technologies, and Equitas did, well, see shedding in open interest, but it was all towards the losses, Alex. It wasn't a great day of trade. We all know that. Let's see whether or not we see a quiet session today and eventually see a direction towards the upside or the downside for that matter.
Thanks so much for that, Agam. All right, let's talk a little bit more about what happened on Saturday in the Indian markets. They saw their biggest fall on Saturday in 4 years. What led to that fall, and what do the market participants think about this correction? Listen in to a few voices.
Market basically maybe expected that there'll be some exemption for LTCG will come back, so that has not happened. Something more concrete for banks, so that also has been a bit of a disappointment. And also for insurance companies, when you're taking away these exemptions and deductions, that might impact. So from a longer term point of view, it's a good idea to make income tax simple and without deductions, exemptions. But then the rate should have been lowered much more. It should have been more dramatic, like what they did for the corporate taxes, but it's gradual, and so therefore the benefit is muted. And at the same time, if you are to do LIC IPO, then the biggest incentive which has been driving flow of savings into life insurance investments should not have been taken away.
I think broadly the Indian investor has been really thrown under the bus. That's what has happened with the DDT, because all the pensioners, all the people middle income group, everybody who used to enjoy tax-free income now will have a taxable income, which may even change the slab that we're taxed under. So you might, of course, all of us will be taxed at the highest rate of 42% against 17.5% that was earlier being taxed. But most of the smaller investors, they will get equally hurt, because today they could enjoy a tax-free income that some of are not even filing the return. Now they all have to do it. So I think if you look at the context of the budget, its context is a white-skin budget made only for the white-skin, because you got exemption, because they'll get exemption from dividend tax, they will get exemption from interest income and all income and infrastructure projects. They got a 5% continuation of their TDS on their bonds. what is there for the Indian investors is nothing. Our tax liability just went up. So I think the market is correctly reading the situation that instead of boosting the consumption, it is going the other way around and is going to take away more and more stuff from us and complicate the life of taxpayers. People used to do what? Buy Nestle's and all these things and keep it in their stock, get a couple of lakh rupee dividends. Now what happened to those pensioners? Suddenly they become taxable entities. So more than just the two concept of one with slab, one without benefits of income tax exemptions, now you got another set of customers in the income tax bracket which were getting dividends. So, life was supposed to be made easy, but as an Indian investor today, I really feel thrown under the bus.
I think in terms of expectations, there were two broad set of expectations, and they were essentially around fiscal incentives. There was one thing that personal income taxes would get lowered, especially post the lowering of corporate tax rate in September. Two, there was expectation that dividend distribution tax would get rationalized, calibrated, the cascading effect would be eliminated. The third was around LTCG, that the long-term capital gains tax, which was imposed 2 years back, will get withdrawn. And fourth, that essentially home ownership and the real estate sector, which was stressed, for that there were expectations that if you buy a new home, it could be completely exempted from capital gains tax, provided you do it in the next 1 year. These were essentially the set of expectations. And I think from this bunch of expectations, some have been met, some have not been met. Around personal income tax, it's been met. Dividend distribution tax has been completely withdrawn. So these two have been met. But the last two, which is essentially to promote investment into two asset classes, which is equity and real estate, there honestly nothing much has been done. On real estate side, I think the exemptions for affordable housing have been extended by a year. But obviously that's not something which the street had expected. The street wanted definitely more. So I think it's a mixed bag in terms of delivery versus expectations.
All right, now Soumit Sarkar is joining me now to tell you all about the stocks that you have to watch out for in trade today. Soumit, we saw a lot of action on Saturday. What are the stocks that are in the news today? Good morning.
Good morning, Alice. I'll start off with the earnings. Firstly, Shobha results were largely in line with estimates. The revenues were up 12%, net profit was up 5%, EBITDA was up 80%, while the margins came in higher at 32.5%. Now, EBITDA adjusted for the Ind AS implementation numbers was up only 25%, while the adjusted EBITDA margins came in at around 22.5%. Garden Reach Shipbuilders revenues were down 24%, net profit was down 38%. The company reported an EBITDA loss of 1.2 crore as against an EBITDA profit of 41 crore reported by the company last year. Relaxo Footwear's revenues were up 9%, net profit was higher by 52%, EBITDA increased by 40%. Now, the growth moderated due to economic slowdown and extended winter in North India, while margins increased due to lower raw material costs and premiumization of some products. Mahindra Holidays and Resorts revenues were down 2%, net profit was down 84%, EBITDA was however higher by nearly 48%. Margins came in at around 15%, while the resort occupancies were around 84%. Now, the company's net profit was down 84% due to a foreign exchange loss in this quarter as against a foreign exchange gain in the last year, that is the third quarter of financial year 2019. Thyrocare Technologies revenues were up 10%, net profit was higher by 36%, EBITDA increased by 23%. Now, cost controls did aid the margins of the company in the third quarter of financial year 2020. In other stocks to watch, auto sales, because of the numbers that have come in for the month of January. Now, Tata Motors domestic sales were down 18% and below analyst estimates. Hero MotoCorp's sales were down 14% compared to last year and again below analyst estimates. Eicher Motors motorcycle sales were down 13% to close to 63,520 units, and this was largely in line with what the analysts were expecting. The Eicher Motors VCV sales were down 6%, while SML Isuzu sales were down up 12% compared to last year to close to 1,112 units. Coal India, because the January production numbers were out, which were up 10% at around 63, while the 63.11 metric tons, while the offtake was up 7% to close to 56 metric tons. And lastly, Muthoot Capital, because the company has completed securitization of products worth nearly 173 crore rupees so far.
All right, thanks so much for that, Soumit. Now, like Agam said, perhaps we can have a quiet opening to trade where we get a little time for the dust to settle and then decide where we're going in terms of where the market is headed. But do stay tuned. We'll take a look at that live, and you can watch all of that right here on BloombergQuint.